Hey everyone, and welcome back to our daily stock update. Let's jump right in with NIO Inc., a Chinese electric vehicle (EV) company traded on the NYSE. So there has been a couple of juicy pieces of news coming through about NIO. Recently, EV sales in China surged in September. This is great news because NIO operates in this market. But remember, the EV market is crowded and highly competitive. Furthermore, NIO has taken strides forward, setting a quarterly record for deliveries in Q3. However, Q3 numbers weren't as stellar as they could have been, which led to trimmed-down analyst revenue estimates. On a brighter note, NIO's shares are on a tear, tracking for 5 straight days of gains. The strong delivery numbers and launch of the new EC6 coupe SUV definitely helped the rally. Now, onto the numbers. NIO's stock closed the day at $8.79 after a slight dip of about 2.77% from the last close at $9.04. The company currently has a market cap of $15.63 billion and with a total of about 1.78 billion shares outstanding. It clocked in a trading volume of about 38 million shares, compared to its average volume of 61.75 million shares. Despite the dip, target estimates from analysts are still optimistic, with a high target of $83 and a median target of $31.30. The consensus recommendation is to buy, indicating a positive outlook. Time for some technicals now. NIO's 50-day moving average stands about $11.31, and the 200-day moving average is around $10, letting us see that NIO is clearly trading below its recent averages. One thing to consider, though, NIO does have a negative earnings per share, EPS, at $1.76, which is a bit worrisome for some investors. This puts NIO's stock at a PE ratio of minus 4.99. which essentially means investors are paying for the company's losses right now, banking on future profitability. That said, the discounted cash flow, DCF, shows $20.94, providing a bullish perspective based on expected future cash flows. So what's the verdict here? Should you buy, sell, or hold NIO stock? Well, positive news for the EV market and strong delivery numbers in Q3 are definitely encouraging signs. The stock trading below its moving averages and the high target estimates indicate potential for a price increase. However, we can't ignore the negative earnings per share, which is an area of concern. So considering everything, we're going to categorize NIO as a hold for now, with an eye on potential long-term growth improvement. It would be prudent to wait and see how the Q4 delivery numbers shape up and watch for further signs of sustained profitability. Remember, this is just a perspective based on the data. Always do your own research or consider professional advice before playing the stock market. And that's it for today's stock update, folks. Tune in tomorrow for more.